What's up, guys? It's Robson Hayashida here, and I was away for a few weeks, and I'm really sorry for that. But don't worry, guys, because I came back, and I'm going to try to publish videos more often from now on. And I hope you guys had a very good week of trading. Let's take a look at this week's trades and see what's wrong, what went well. Let's check it out. All right, so today we had a very busy week. I couldn't trade very often, so I ended up just taking 3 trades. Let's take a look at each of them and see what happened. So here I have the first trade that I took on July 23rd. This is a trade that it was dollar-yen pair on the 1-minute chart. I ended up making a profit of 4 pips and I took a long trade. So I bought the currency pair. And here it says that there was a strong rejection from the 111.250 is the quarter level with notable volume, 2 candles. Bullish candle formed just below the 200 EMA. Let's take a look to see what it is. So, okay, I have here, can you guys see this trend? So I have an uptrend that never breaks the structure. What do I mean by structure? So I mean by structure, this structure that you can see, that the line, you know, the price, the candles, are never go below the 200 EMA. So I have a structure that goes up and down, up and down. As you see, if you are a beginner, every time we have candles, like a group of candles, they just don't go up, they just don't go down. They have to go like up and make a correction, go up again, make another correction. And this is how the market moves. If you're not a beginner, I'm sure this is very boring stuff for you guys, but I have to explain sometimes. You see that the candles are trying to break this 200 EMA, and it does break it with a red candle. But the thing is, it breaks with a red candle and fails to break this support line. The support line is a key level. So when you have the support here, why do I say this is a strong support? Because it doesn't happen only here. It happened again here, and it happened again here. So you have other times that the support, the candles try to break the support and fail to break the support. And here again, it happened. So you have the last time, the most recent time here, but it happened once, twice, and happened like 3 times here. So it's trying to break it a lot of times. It fails to break. Here you can count like 1, 2, 3, right? If you count the candles. And here as well, you can count like 1, 2. If you think about, if you want to be more precise. And here as well, you can count 1, 2, all right? So you can count, let's see, you can, before that, it was try to break 1, 2, 3, 4, 5, 6, 7. Just by the time I got to the chart, I can already count 7 times they try to break that support line at 111.250, right? This is 255, but the line itself is on the 250. And that's why we call it 1/4, because it's the 0.250 that is a quarter of the whole like area that we call it. So the next area after this will be the 111.500, and that this is called 1/2 because it's half of the neck of the entire level, which the entire level is 1, right? Okay, so if you guys understand that part, you understand that here it broke the 200 EMA, failed to break this, and came back again. And when it came back, you see the shadow. You have a very long shadow. What does it mean? It means that you have a very strong support happening here. And you guys can ask me, you guys can say, hey Robson, but it broke, right? It broke the 200 EMA. Yes, it broke it. But the thing is, if you take a look at go back to your documents, go back to the PDF, the original PDF posted by Trader at Home, and you can see this PDF at the international Pvsra international.com website. So if you go there, you can easily download the PDF. Take a look at the original PDF written by Trader at Home. He says that the bulls, they like the market movers, the market makers, they like to have very strong support just below a key level. And here the key level would be this 200 EMA, the very important support line. So the bulls like to have very strong volume, and they will trade just below the 200 EMA to move prices upper, to move prices up. And why they do that? Because they want to make a better one. So the market makers here, they probably started buying, and they will move even lower. They will move the price even lower. Why? Because they want to buy at an even cheaper price. And that's why here you experience a very big bearish move, and that goes all the way here. So a lot of market makers, they bought the currency here because it was really low, and then the market made a retracement, and finally the candle closed here. After that, you have very strong bullish move. Here the volume was even bigger than the volume before, which gives you a clue. Some people like even to draw inclination line here, right? You can see this very often at the Pvsra trades on Forex Factory. A lot of people will draw an inclination line here to indicate that the volume has risen. Why they will do that? Because then they will know that there are even more market makers, even more hedge funds, even more brokers, even more institutional traders. There are even more like institutional traders placing trades here, and that moves the price up. So you have a volume, increase of volume, and this candle was formed just below the 200 EMA. So although this broke the price, the candles broke the 200 EMA, I have this happening just above a key level and just below the 200 EMA. So I decided to buy here. I made my profit and closed here. Why did I close here and not why I didn't close here? First, I couldn't see this coming, right? This is future, so I could never see this coming. And I closed here because this is just the upper band of the dragon, of the 50 EMA. So I wanted to play safe. I made my 4 pips and got out. Another thing is I'm looking at M1, and in order to make sure that this trade was safe, I also took a look at M5. As a matter of fact, I also took a look at M15. But let's take a look at M5 just so that you guys can spot something. So you guys can see here, what else did I spot? So this thing, right? It's the same trade, exactly the same trade, but on M5. I changed the chart to M5 just to make sure. So here I see that not only this is key level, not only this is the 1/4 here, 1/4 level, but also this is the lower band of the dragon on M5. So doesn't it tell you something, right? It tells you something. It tells you that it's a very strong support because of two reasons. It's the key level, one reason. It's forming just below the 200 EMA or M1, the second reason. And one more reason is because it's the lower band of the dragon here, right? It's the lower band of the dragon. So when I saw this, I was like, wow, I have to take this trade. I have to take it. So I took it and I closed it here. Let's take a look at another example, another trade that I took. Here you can see trades by other people. And yes, okay. So this trade is also very similar to the trade above. So as you can see here, there is a trend, uptrend, that never breaks the 200 MA, doesn't break the 200 MA, and it's really similar to the trade I just took, the trade I just showed you guys. It's really similar. So it fails to break the 200 MA. You have a lot of support, a lot of huge volume, and all those candles fail to break the 200 MA. And you have higher tops. So you see that the top here is higher, then the top here is higher, then the top here is higher. Here you have, well, this one is still higher, right? And here you have a small correction. After the correction, I entered, went against me for a while, but after that went up again. So why did I open here and not here? I can see that after a while this red candle failed to break the 200 MA, and I saw an opportunity. And when I see that this failed to go even lower, I entered here. I could have entered before or a little bit later, but I entered here, went against me for a while, and I ended up making my 5 pips of profit. Even if this was not 5 pips, I would have, I think I would have closed anyway. Because after this red candle, probably I was expecting some kind of correction, right? So I would have closed here anyway. But or not on this candle, maybe on the red candle. But anyways, the target was met, so 5 pips of target. I closed here. Let's take a look at another trade. And the next trade was a loss. So the next trade was this one. So why did I take this trade? I took this trade because here you have a formation that goes below the 200 MA. But the thing is that for short term here, I have this uptrend. And I thought that when I saw this green candle, it was a green candle forming above the 25 WGT. This WGT is a moving average, the weighted moving average as well. So when I saw a huge volume, and this was my mistake because this volume was not really, I wanted to see this volume even bigger, like something like even up to here. And this was tiny, so I actually thought, yeah, after I took this trade and I lost money, I thought, oh, maybe I shouldn't have. But anyways, as my friend Cigar Guy always says, like our life as a trader is full of I should have, I would have, I could have, right? So let's forget about all those possibilities because anyways, I took the trade. So I took the trade because I was expecting after this green candle, I was expecting a huge green candle here that would eventually come out, in my opinion. Usually when I have this green candle forming above the 25 WGT, and I have an uptrend like this, usually this would happen. Why in this case it didn't happen? Maybe because of this formation. I'm not really sure. And the thing is, after that, I would expect that it would eventually go up, but it didn't. And after that, I didn't take any trades, so I was safe. What happened after this is that finally broke this 200 EMA and went all the way down, even below 100, the 129.140. Even went even below this. So I was lucky after that. And this, well, these are the trades for this week, guys. If you have any comments, please write on the comment section below, and I'll try to publish videos more often from now on. So I hope you guys have a very pleasant weekend, and let's make a lot of pips next week. Bye.